In this video we are going to learn about one of the topic from direct taxation. Please turn on your CC or subtitles from settings for clear understanding. Let's get started. Agricultural income. Let's know about meaning of agriculture. And agriculture purposes. Agriculture means tilling of the land, sowing of the seeds and similar operations. These are basic operations and require the expenditure of human skill and labor on land itself. However, the term agriculture cannot be extended to all activities which have some distant relation to land, like dairy farming, breeding and rearing of livestock, butter and cheese making, and poultry farming. Operations to be performed after the produce sprouts from the land, which is weeding, digging, etc., are subsequent operations. These subsequent operations would be agricultural operations only when taken in conjunction with and as a continuation of the basic operations. These subsequent operations would be agricultural operations only when taken in conjunction with and as a continuation of the basic operations. That is, basic operations are those operations by agriculturists which are absolutely necessary for the purpose of effectively raising produce from the land are the basic operations. Income derived from cultivation is agricultural income. Even when income derived is rental income, it should be in the nature of rent for the use of such land for agricultural purposes. SSC growing mulberry leaves, feeding them to silkworms and obtaining silk cocoons, will not result in agricultural income. Section 2, 1a, which defines the term agricultural income, does not contemplate sale of commodity different from what is for market, and not to bring about an altogether new commodity. Income attributable to growing mulberry leaves alone shall be treated as agricultural income. Definition of agricultural income. Section 2, 1a. Agricultural income may arise in any one of the following three ways. 1. It may be rent or revenue derived from lands situated in India and used for agricultural purposes. 2. It may be income derived from such land through agriculture or through the performance of a process ordinarily employed by a cultivator or receiver of rent in kind to render the produce fit to be taken to the market, or through the sale of such agricultural produce in the market. 3. It may be derived from any farm building required for agricultural operations. Further, income derived from saplings or seedlings grown in a nursery would be deemed to be agricultural income, whether or not the basic operations were carried out on land. Exemption. Section 10, 1. Provides that agricultural income is not to be included in the total income of the SSC. Taxation of the agriculture income. Agriculture income is totally exempt under the Act, but shall be included in the total income in case of certain SSC for the purpose of determining the rate of tax on the non-agriculture income, known as partial integration of taxes. It is applicable to individuals, HUF, AOP, BOI, and artificial juridical persons. Two conditions which need to satisfied for partial integration are: first, the net agricultural income should exceed Rs. 5,000 p.a. Second, non-agricultural income should exceed the maximum amount not chargeable to tax. That is, if such person is paying tax under default tax regime under Section 115 BAC, then Rs. 3,000,000 is the basic exemption limit irrespective of the age of the person. If such person has exercised the option to shift out of the default tax regime, then the basic exemption limit would be 5,000,000, 3,000,000, 2,50,000, as the case may be. Only if non-agricultural income exceeds this limit, partial integration would be required. It may be noted that aggregation provisions do not apply to company, firm, cooperative society and local authority. The object of aggregating the net agricultural income with non-agricultural income is to tax the non-agricultural income at higher rates. Tax calculation in such cases is as follows. Step 1. Add non-agricultural income with net agricultural income. Compute tax on the aggregate amount. Step 2. Add net agricultural income and the maximum exemption limit available to the assessee. Compute tax on the aggregate amount. Step 3. Deduct the amount of income tax calculated in Step 2 from the income tax calculated in Step 1. That is Step 1 minus Step 2. Step 4. The sum so arrived at shall be increased by surcharge, if applicable. Reduced by the rebate, if any, available under Section 87A. Step 5. Thereafter, it would be increased by health and education cess at 4%. It should be noted that in case total income excluding long-term capital gain, short-term capital gain, Section 111A, casual income, does not exceeds the maximum exemption limit, partial integration of tax will not be applicable. For clear picture of this concept understanding I have given sample problem in slide, do check it out. Next. Gain arising on transfer of urban agriculture land. The capital gains arising from the transfer of such urban agricultural land would not be treated as agricultural income under Section 10 but will be taxable under Section 45. Next. Non-agricultural income. I have listed out income which is not regarded as agricultural income. 1. Income from butter and cheese making. 2. Commission as a percentage of agriculture income. 3. Dividend from a company engaged in agriculture activity. 4. Income from sale of forest trees of spontaneous growth. 5. Royalties income of mines. 6. Income from fisheries, poultry farming, dairy farming and animal husbandry. 7. Income from supply of water for irrigation purposes is not an agriculture income. 8. Income from brick making. 9. Income from land used for storing agriculture produce. For better understanding of the concept, certain examples of agricultural income and non-agricultural income are given below. Instances of agricultural income. The following are some examples of incomes which have been held to be agricultural income. Profit on sale of crops after harvest, made by cultivator or receiver of rent in kind. Compensation received from insurance company for damage caused to the crops by hailstorm or flood. Salary, interest on capital, share of profits, etc., received by a partner of a firm having agricultural income. Income from running a dairy which is purely incidental to agriculture. Income from growing flowers and creepers. Income from saplings and seedlings grown in nursery. Instances of non-agricultural income. The following are some examples of incomes which have been held to be non-agricultural income. Income from sale of trees, flowers, and fruits growing spontaneously in forests. Profits arising from purchase and sale of standing crops. Remuneration received by a manager as a percentage of profit from a firm having agricultural income. Annuity received for transfer of agricultural land. Interest on arrears of rent payable in respect of agricultural land. Interest received by a money lender in the form of crops. Next. Income from composite activity of agriculture and business. Where the agricultural produce like tea, cotton, tobacco, sugarcane etc. are subjected to a manufacturing process and the manufactured product is sold, the profit on such sales will consist of agricultural income as well as business income. That portion of the profit representing agricultural income will be exempted. For this purpose, Rule 7, 7a, 7b and 8 of Income Tax Rules, provides the basis of apportionment. 1. Income from sale of tea grown and manufactured by the assessee in India. Amount of agricultural income 60%. Non-agricultural income, that is business income, 40%. 2. Income from rubber plants grown by the seller in India. Amount of agricultural income 65%. Non-agricultural income, that is business income, 35%. 3. Income derived from the sale of coffee grown and cured by the seller in India. Amount of agricultural income 75%. Non-agricultural income, that is business income, 25%. 4. Income derived from the sale of coffee grown, cured, roasted, and grounded by the seller in India. Amount of agricultural income 60%. Non-agricultural income, that is business income, 40%. Rule 7. Agricultural produce other than tea, rubber etc. used as raw material in a manufacturing concern, where income is partially agricultural income and partially income chargeable to income tax under the head profits and gains of business, the market value of any agricultural produce which has been raised by the assessee or received by him as rent in kind and which has been utilized as raw material in such business, or the sale receipts of which are included in the accounts of the business, shall be deducted. No further deduction shall be made in respect of any expenditure incurred by the assessee as a cultivator or receiver of rent in kind. Rule 7a. Income from the growing and manufacturing of rubber in India. This rule is applicable when income derived from the sale of latex or senex or latex-based crepes or brown crepes manufactured from field latex or coagulum obtained from rubber plants grown by the seller in India. Income derived from the sale of rubber obtained from rubber plants grown in India shall be computed as under. Step 1. Compute the income under the head of profits and gains of business or profession after allowing deduction under Section 33 of. Step 2. Computation of agriculture and non-agriculture income in the following manner. 35% of such income is liable to tax. 65%, balance, of such income is exempt from tax. I have given an example problem for clear understanding. Take a look. Rule 7b. Income from the growing and manufacturing of coffee in India. Income derived from the sale of coffee grown and cured in India shall be computed as under. Step 1. Compute the income under head profits and gains of business or profession after allowing deduction under Section 33 of. Step 2. Computation of agriculture and non-agriculture income in the following manner. 25% of such income is liable to tax. 75%, balance, of such income is exempt from tax. Income derived from the sale of coffee grown, cured, roasted, and grounded in India shall be computed as under. Step 1. Compute the income under head PGBP after allowing deduction under Section 33 of. Step 2. Computation of agriculture and non-agriculture income in the following manners. 40% of such income is liable to tax. 60%, balance, of such income is exempt from tax. Rule 8. Income from the growing and manufacturing of tea in India. This rule applies only in cases where the assessee himself grows tea leaves and manufactures tea in India. Income derived from the sale of tea grown and manufactured in India shall computed as under. Step 1. Compute the income under head PGBP after allowing deduction under Section 33 of. Step 2. Computation of agriculture and non-agriculture income in the following manners. 40% of such income is liable to tax as business income under the head profits and gains of business or profession. 60%, balance, of such income is exempt from tax. Let's see some most frequently asked questions in this topic. Income from nursery constitutes agricultural income according to Section 2, 1a, income derived from saplings or seedlings grown in a nursery would be deemed to be agricultural income, whether or not the basic operations were carried out on land. Lastly, income from farm building. Income from the farm building which is owned and occupied by the receiver of the rent or revenue of any such land or occupied by the cultivator or the receiver of rent in kind, of any land, with respect to which, or the produce of which, any process discussed above is carried on, would be agricultural income. However, the income arising from the use of such farm building for any purpose, including letting for residential purpose or for the purpose of business or profession, other than agriculture would not be agricultural income. Further, the income from such farm building would be agricultural income only if the following conditions are satisfied. The building should be on or in the immediate vicinity of the land, and the receiver of the rent or revenue or the cultivator or the receiver of rent in kind should, by reason of his connection with such land, require it as a dwelling house or as a storehouse. In addition to the above conditions, any one of the following two conditions should also be satisfied. Point A. The land should either be assessed to land revenue in India or be subject to a local rate, assessed and collected by the officers of the government as such, or Point B. Where the land is not so assessed to land revenue in India or is not subject to local rate, it should not be situated in any area as comprised within the jurisdiction of a municipality or a cantonment board and which has a population not less than 10,000, or it should not be situated in any area within such distance, measured aerially, in relation to the range of population as shown here in slide. Shortest aerial distance from the local limits of a municipality or cantonment board referred to in item. Less than 2 kilometers. Population according to the last preceding census of which the relevant figures have been published before the first day of the previous year. Less than 10,000. More than 2 kilometers but less than 6 kilometers. Population according to the last preceding census of which the relevant figures have been published before the first day of the previous year. Less than 1,000,000. More than 6 kilometers.